All right, what the heck happened to the stock of Mattel today? The iconic toy maker behind Barbie, Hot Wheels, Fisher-Price reported a seemingly solid quarter last night. While their sales came in a tad light, down 3% year over year, they still delivered a terrific 8-cent earnings beat off a 3-cent basis. Management's full-year forecast looked impressive. Initially, Mattel stock soared in after hours. It was up 5% at one point. Makes sense. But then the enthusiasm faded, stock opened flat, and then by 10:30, it had turned negative, and it finished the day down 3%. With a problem. According to some analysts, this was a low-quality beat. Most of the gains here are coming from cost cuts, not from any strength in the toy business, which many think is in rough shape. My view. Look, Mattel's been turning itself around. If they can generate much better than expected profitability with slightly subpar sales, well, who knows how well they'll do when the revenues go up. So could it be worth buying into this weakness? Let's check in with Ynon Kreiz. He's the chairman and CEO of Mattel. Get more insight into this confusing quarter and its turnaround. Mr. Kreiz, welcome back to Mad Money.
Thank you, Jim. It's great to be here.
Okay, so I'm going to posit something and you take it. I think people are misunderstanding what's happening. You cleaned up everything, including costs, in 2019. In 2020, beginning with the Netflix Mattel deal, you are now playing offense.
Absolutely right. 2019 was an inflection point in our turnaround. We stabilized top line after 5 years of consecutive decline. We managed to significantly improve profitability and became positive free cash flow for the first time in 3 years. So the turnaround is working. And when it comes to our revenue performance, we actually grew revenue in every geographical region and in 5 out of the 6 categories where we operate. So we're very happy with the performance. We grew market share in the fourth quarter and retain our global leadership position for the year.
Now, you have what I would describe as being a very attractive entertainment slate. When I first met you, you were saying that Mattel's going to be a platform. When I see, for instance, a Masters of the Universe series coming, I'm thinking this is what's going to spur demand for Mattel in 2020.
Absolutely. Our strategy is to transform Mattel into an IP-driven, high-performing toy company. We own one of the strongest catalog of children and family entertainment franchises in the world. And what you're seeing now with Masters of the Universe, as well as 8 movies in total that we announced between 2018 and 19, is a perfect example for what is coming. Masters of the Universe is a great franchise, one of the great mythology, superhero mythology. 2 shows with Netflix, another movie coming. Expect more to arrive.
Now, in the meantime, you've re-energized Barbie. I have to point out, and people have to understand how important this is, 9th consecutive quarter of growth. Where can that franchise go if it grew 9% to $1.2 billion, highest full-year gross sales in the last 6 years?
Exactly. Our purpose as a company is to empower the next generation to explore the wonder of childhood and reach the full potential. And you couldn't have a better flag carrier than Barbie to promote diversity and inclusion and inspire girls to fulfill their potential and be anything they want. Barbie is on a run. As you said, we just achieved our highest year of sales after 6 years. Barbie has been the #1 fashion property globally for each of the last 4 years, and the best is yet to come. We have some great product innovation that we're introducing this year. Just can't wait to show you more.
Well, speaking of can't wait, I can't wait to hear what you're going to talk about with American Girl at the Toy Festival, and I have to believe that you've got a plan, because that does have to turn around.
Exactly. American Girl is in turnaround. It is one of the most iconic, cherished brands in the industry. It has great legacy, great heritage, and deep, engaged fan base. We're now in the first year of a turnaround. We're launching a new strategy under a new leadership. We're enhancing the retail experience. We're launching new content, new product architecture, great experience in the stores. Again, it's a turnaround. It will take time, but we are very firm believers in the potential and the future of the brand.
I know you as a total no-nonsense guy. I need a truth-on-the-ground appraisal of a very dynamic, fluid situation, which is China and the coronavirus. I have to believe that you've checked this out. You've made some decisions about how to handle it. Tell me what's really going on.
So first, I should say that our thoughts are with the people affected, our people on the ground. We're taking all the necessary actions to protect their well-being, their health and safety. We have a team of experts in the region that are looking to minimize the disruption. We have the ability to mobilize some resources, shift inventories, leveraging our production capabilities and relationship with third parties. And so far, we're okay. If this lingers, it will have an impact, just like it will on the rest of the world. But we believe we have, relatively speaking, a good standing. We're in a better position than the rest of the industry because of our size, our liquidity, the way we design our manufacturing footprint, which is now becoming a competitive advantage. And we hope that we'll be able to mitigate the disruption. Of course, if this lingers, it will be tougher. But for the time being, we just have to wait and see and react as things evolve.
I know you took over. You said you're going asset light. You are, again, completely true to your word. Last question. Where is the best place to build a toy if China's offline?
Well, capital light is a key part of our strategy. We, as of now, reduced 3 of the factories we consolidated or closed in China, Mexico, and Indonesia. We recently announced that we're closing another factory in Canada. And this is all part of a campaign to achieve more efficiency, higher performance, and better output from our manufacturing footprint. We are also in the process of reducing the number of items we manufacture by 30% by the end of 2020. This is all part of our structural simplification effort, which has been a headline driver for our cost savings, and really designing a company that is more progressive, more dynamic, more flexible, that is able to progress and capture value from our incredible asset base. This is really part of a journey. We're not done this year. There's more coming. We expect to achieve $50 million of savings in 2020 from our capital light project. And this is on top of the $875 million of savings, run rate savings that we achieved as of the end of 2019. So a lot of efficiency to capture, dropping to the bottom line, and helping us drive growth in the long term.
All right. Well, look, the story is it just gets better and better every time I talk to you. You're completely true to your word about what you said you'd do. And I think you'll do the same in 2020, which is good news for shareholders. Thank you to Ynon Kreiz. Good to see you, sir.
Thank you so much, Jim. Thank you.
Man of his word. Told me he was going to do everything that he's ended up doing. I think the story's a good one. You do have some coronavirus risk, obviously. That's Ynon Kreiz. He's a chairman and CEO of Mattel. Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.